Hello, welcome to Black Friday with Brittany Kennedy. Today is May 8th, 2020, and I'm excited for the weekend. Not exactly sure why I get excited about the weekend anymore, but I do. Every day is kind of the same, but yet I still get excited about the weekend. I don't know. Guys, coronavirus is still happening. I don't know if some of you New Yorkers or some of you people in Georgia thought that coronavirus went on a vacation, but it hasn't gone on a vacation. It's still here. So while you guys were sunbathing in Central Park and while you guys were lined up in outside some store for some goddamn Jordans is completely beyond me. But it just screams ignorance. It screams like it screams a lot of stuff, but really, I don't really want to say those things on this channel. But it screams things that show that you're selfish, that you don't care about others, that you are ignorant, that you think you're invincible. And I guess I do want to say those things on the channel because I'm saying them. So there you have it. Stay your ass inside. Period. It's simple. For those of you that are new to Black Friday with Brittany Kennedy, who happens to be me, this is a space where I like to talk about socioeconomic issues in the Black community that are too taboo to talk about, things that we really don't like to talk about, but that we should talk about. And my thought is that talking about them will bring awareness. That awareness will help create solutions. Those solutions will help reduce the problems that we see in the Black community, thus allowing our people to rise as we should. That's my thought. Okay? So last week, I posted a video titled, Why Black People Need to Invest Their Money Now. And I think some people were kind of like, no, now is the opposite of the time where I should invest my money. And that's not exactly true because some of those stocks are going up tremendously, while some of them, yes, may be going down. But things like Netflix, why? Because everybody's at home watching fucking Netflix. But the reason why you should invest now is because now you're probably feeling the effect of the fact that you have not prepared yourself financially. So now's a good time to start thinking about your financial portfolio and actually getting it together so that in the time of a crisis, outside of just your everyday occurrences, you will actually be ready. Your family will be ready. But overall, right now, statistics show that Black people, us lovely melanin people, that it will take us 2 centuries to actually catch up to the white people's economic status. 2 centuries is how long it's going to take. So we should start thinking about how to be progressive about our finances, how to be financially literate. Right now, we are kind of financially illiterate. And for those of you that do not know, financial literacy is not referring to people who can count versus people who cannot count. It's about people who know how to put their money in proper places where you can actually build your finances. It's about the knowledge of money and how to grow your finances. It's not about counting money. Just want to make that clear. So I want to expand on that. And I'm really excited because I have a newborn son who I want to prepare. I want to make sure that he is prepared financially for his future. So that means saving up for his college tuition. Making sure that hopefully I save up enough money to where my little boy does not have to worry about even that he's not struggling in terms of working in order to pay bills, that those are taken care of, but that maybe while he's in college he still works so that he can have more money and he can. But really, I'd rather him just focus on his studies because it really is difficult these days and we should make it easier on our children. We should have generational wealth, meaning we should be passing down money to our future generations, not leaving them with a big ass funeral bill along with a shitload of bills that we didn't pay. Okay? So, right now, Blacks are 35% less likely to invest into the stock market than white people. Also, those who are investing into the stock market have an income of $50,000. So basically kind of saying that poor people are not investing. people that are making about 25,000 a year, which is a large majority of Black America, is not investing. And you guys are the ones that really should be investing. And I know you're probably thinking like, oh, but I don't have the money. That takes a lot of money to invest, to purchase a stock. It doesn't really cost that much money. And I'm going to show you today how you can do it. And I hope you actually follow this. And I hope you share it. I hope you subscribe to this lovely channel. And I hope you share it with your friends, your family, your enemies, everybody Black, share it because they need to know. So I'm going to get right into it here, and I'm going to be looking at some articles, beginning with an article from Policy Genius. It's titled Robinhood versus Stash, which app is best for first-time investors? And according to Bankrate, only 1 in 3 millennials invest in the stock market, and that's including people who invest through a mutual fund or retirement account. The two biggest reasons millennials don't invest: they don't have enough cash or have too much student loan debt, and they don't know anything about stocks and bonds. Fact, I don't know much about stocks and bonds, but I'm learning, and I'm going to teach you as I learn. So these two apps are lovely, Stash and Robinhood. I'm going to get into the basics here. Stash, also known as Stash Invest, is an iOS and Android app that allows investors to start investing with as little as $5. It offers users the ability to buy fractional shares in a curated selection of exchange-traded funds, also known as ETFs. Does that sound like gibberish to you? Basically, buying a share of an ETF allows you to buy a small part of a larger fund that holds different stocks. For example, a common ETF in many portfolios is the Vanguard S&P 500 ETF, which buys stocks from all 500 companies on the SP 500. Stash allows you, there's a typo here, but Stash allows you to buy a fractional share, which means you buy just a small part of a more expensive ETF. Stash is designed to move you away from thinking about individual stock. Instead, Stash wants you to think about your portfolio in terms of what you believe, want, or like. Those are literally the 3 categories the Stash team have organized their ETFs into: I believe, I want, I like. Stash also renames the ETFs to fit those categories. For example, the First Trust NASDAQ cybersecurity ETF is called Data Defenders and lives under the I Believe tab. Lives under the I Believe tab. Stash Invest charges users $1 per month until their balance reaches $5,000, when it changes to 0.25% of your balance. So that's one of the apps. The other really good app is called Robinhood. Robinhood is an online stock brokerage similar to competitors like TD Ameritrade or E-Trade. However, unlike their competitors, Robinhood allows you to buy shares of stocks and ETFs with no commission. There's also no minimum account balance you need to maintain. Unlike Stash, there's no curation on Robinhood. Now, personally, I like to kind of curate things. I would like to be a little more in control over my money's going. And so I like the option of Stash more. But if you're somebody that doesn't want to choose and you want them to choose for you, Robinhood sounds like a really good idea. So, to continue, this is the real deal. You have direct access to buy and sell over 5,000 US listed stocks and EFTs. Robinhood's interface emphasizes real-time market data, but not much else. If you navigate to a specific stock, you'll find recent headlines and some statistics on the stock's performance, but not much in the way of in-depth research or guidance for first-timers. That's one of the things I don't like about this. It sounds like Stash gives you more guidance, whereas, obviously, I don't know. Anywho, so Stash gives you more guidance, Robinhood does not. There's no cost to using Robinhood, though there is an optional monthly subscription to Robinhood Gold, a margin account for advanced users. Unlike Stash, you must have enough money in your account to buy a full share of stock or ETF. So that's another thing that makes me kind of like Stash more. Okay, I'm going to go ahead and just jump ahead. Let's see here. Is there anything else in this article that I think you need to know? Obviously, all articles, I give you the link in the details below, so you can just click on it, check it out yourself. But yeah, so yeah, it just kind of talks about your preferences a little bit more in this article, and what they think is better. I will go ahead and go on to the review. So Stash review is pretty good. It's from nerdwallet.com and Stash Review 2020, pros and cons, how it compares. It's got a review of 3.5 stars. I think I would give it a 5-star, but I haven't used it yet. Watch. I've been doing my research on which stock I would prefer. I'll talk about that in a minute though. Bottom line, Stash aims to make investing approachable for beginners. The service has 0 account minimum and charges $1 to $9 a month, depending on account types. If you're looking for a little hand holding while you build a portfolio of stocks and ETFs, Stash may be a good fit. So this is why I said I prefer Stash over Robinhood, because again, it's like, if you really don't know much about it, and I'm kind of really talking to you guys who really don't know much about stocks, Stash looks like the best option. Though I do recommend that you do your own research. These are just my opinions. Please do your research. Pros and cons. So pros, educational content and support, fractional shares, values-based investment offerings. Cons, no investment management, high ETF expensive ratios. So, anywho, it also gives you a breakdown of how it compares to other advisors. But their full review states, investment app Stash aims to make the process of selecting investments, specifically stocks and exchange-traded funds, quick and easy for beginners. It costs $1 per month for a brokerage account, plus access to Stash's online bank account and debit card, which includes a rewards program. The minimum balance is $0, and because Stash offers fractional investing, you can buy portions of a company stock or a fund share for pennies. Stash offers other account options too. For $3 a month, you get the brokerage and bank accounts plus a retirement account, either a Roth or traditional IRA. For $9 a month, Stash offers all of the above, plus 2 custodial accounts for minors, a metal debit card rather than plastic. Ooh, fancy. A turbocharged rewards program, and a monthly investment research report. So, Stash is best for investors who want guidance selecting investments, new investors, thematic or impact investors. So I will check that out. Again, it will be in the link, or I will include the link in the details so you can check it out. Let's go ahead and go to the full review of Robinhood. This one has a 5-star rating, which is awkward because I just said that. I feel like the other one should. But anywho, bottom line, Robinhood provides free stock options, ETF, and cryptocurrency trades, and its account minimum is $0 too. Mutual funds and bonds aren't offered, and only taxable investment accounts are available. Still, if you are looking to limit cost or trade crypto, Robinhood is a solid choice. I know nothing about cryptocurrency, but I'm going to learn. Pros and cons, no account minimum, streamlined interface, cryptocurrency trading. Cons, no retirement accounts, no mutual funds or bonds, limited customer support. So that is that. And just to give the breakdown, Robinhood is a free trading app that lets investors trade stocks, options, exchange-traded funds, and cryptocurrency without paying commissions or fees. Until recently, Robinhood stood out as one of the only brokers offering free trades, but with many big-name online brokers eliminating trading commissions and fees in late 2019, Robinhood's bright light has dimmed a little. That said, it's still a solid choice, and currently it's one of the few brokers that gives investors the opportunity to trade cryptocurrency. Robinhood offers both web and mobile trading, but platforms are purposely bare bones, and some investors may find the range of tradable securities and account options lacking. Robinhood is best for mobile users, individual taxable accounts, margin accounts, and cryptocurrency. So, let's get to investment options, because there's a lot of different options of things that you can invest into, and I suggest you do your research. Again, I'm providing you a few articles, but if you really, I suggest you do your own research and find out what is best for you, what you really want to invest into. So this is 20 of the top stocks to buy in 2020. This article was posted January 3rd, 2020. And I'm just going to list the top 20, or the 20 on this list, not just the top 20, but the top 20 overall, whatever, you get it. The Vanguard Total Stock Market ETF, the Vanguard Total International Stock ETF, Amazon, Alphabet, Facebook, Intuitive Surgical, Axon Enterprises, AT&T, Verizon Communications, Ford Motor Company, General Motors Company, 1OK, Terraform Power, Brookfield Infrastructure Partners LP, Care Trust, REIT, iRobot, Lululemon Athletica, Wayfair, Netflix, and Constellation Brands. Now, they may have changed a bit. So, do some research, because I did look up what the most recent ones are, and of course the stock market does change, but who knows, these still could be your top 20. What I do suggest is cross-referencing, looking up which one of the stocks that I just listed actually is on one of the apps that I've shared with you, so Robinhood or Stash, and discover how they're doing, what works for you. What I have heard is that Netflix is really, really good right now to invest into, which is considered number 19 on the list. I highly doubt they're still number 19 on the list, considering coronavirus. Amazon is number 3. Amazon is doing great right now. Why? Because everybody's at home shopping. They got nothing else to do. And even when there is not a crisis, I still hear about people like Amazon is their go-to. They ship through Amazon all the time. They buy through Amazon all the time. So I would really look at that. Facebook ain't really going nowhere, as far as I know. So maybe another one really good to invest into. Those are my personal options and what I think. Let's look at the top 7 right now. The top 7 ETF to invest into. So it's iShares Russell 1000 Growth ETF, Invesco QQQ ETF, Vanguard Information Technology, which is one of the ones I just mentioned, Healthcare Select Sector SPDR Fund, Vanguard Small Cap ETF, SPDR S&P Mid Cap 400 ETF Trust, whatever that is, Vanguard Dividend Appreciation. So those are the 7 best growth ETFs, and that's according to moneyusnews.com. So I am really excited about building my own portfolio, and I hope you guys are too. At the very least, at least just one. You don't have to go crazy and invest into every single stock available, purchase all the stocks available, but do your research first for sure. Make sure that you know what you're doing, that you're comfortable investing into what you're investing into. And a lot of these things you kind of really can't go wrong. Like I said, I have not opened up an account yet, but I am going to this weekend. I did some research last weekend with my son's father, who does have quite a few stocks out there that he's invested in. And he's seen the stock market go up and down, and he's been able to give me some good pointers on which ones he feels are good. One of the ones I did not see on that list was Disney. Disney, I feel like, is one of those things that you really should invest in. I know Disney just did the Disney Plus situation, which is really, really going to kick things up quite a bit. Once I think coronavirus is all over, I think Disney is probably going to be pulling a lot of the Disney stuff from Netflix and putting it onto Disney Plus. Disney's been around for forever. It controls the Marvel series and a lot of other stuff. So Disney, I feel like, is something to definitely look into. And that is my little tidbit about money today and where you should be putting your money. I hope you're thinking about this wisely. Invest your money. Like I have already said, it does not take a lot. You could take $100 to start. because you're able to purchase a portion of a share instead of the whole share, you don't have to think large. You don't have to think like, I need to put $1,500 into this account. I need to put $2,000 into this account. Some people do that. Good for them, but you don't have to. Me, I'm starting out with like $100, $120. I'm going to look at probably, I think Netflix and Disney. I think I'm going to go with Disney, but I don't know. My top three for me right now are Amazon, Netflix, and Disney. And so, I don't know, I think I need to do a little bit more research on like the Vanguard situation, because those were at the number one slot. And so I'll figure out what I feel is best for me. But I think some of those stocks you have to put in a little bit more. And I'm really only ready to invest about $100 right now to see where it goes, just for starters. Also, high yield savings accounts. Please look into them. Put your money into something that has a high interest rate, something that bears interest frequently. Some accounts have daily, some accounts have monthly. The interest rate right now overall for the most part is about 1.5 to 1.7. Invest into that. Please do your research. Do some research on if you need counsel, if you need guidance, there's plenty of companies out there, and maybe I should actually cover that in my next video. But I hope you guys enjoyed this video. I hope it was very knowledge filled. I hope you guys go out there and invest your money. Your children need it, your future generations need it, you need it. You never know what's going to happen. And like I said, in situations like this with coronavirus where nobody is able to really work, you find out very quickly how much your money, or I don't know what I was about to say, but basically what I was about to say is that you find out very quickly how important your money is and how far your money can really go. If you don't have it saved up the way that you needed to, if you only had a couple of $1,000s saved up, you're probably going through that, or probably gone through it already, just in rent alone, groceries. So please, you're supposed to have at least 3 to 6 months worth of bills of your salary saved up, and you really should. So, hope you take my advice, hope you actually invest your money. Thank you so much. Subscribe to this channel, share it. Ciao, love you.